5 best tax saving funds which can be used to save taxes as well as help you grow your wealth. We'll also take a look at how these funds have performed in the past. So let's get started. Equity-linked savings schemes, often referred to as tax-saver mutual funds, primarily invest in equities. They have the potential to generate double-digit returns with market ups and downs. Just like flexi-cap funds, ELSS funds can invest in large, mid or small companies across sectors. These funds have a mandatory 3-year lock-in and they provide additional taxation benefits under Section 80C of the income tax. So if you are investing in these funds, you can claim a tax saving of up to 1.5 lakh rupees during a financial year. Now, before we jump onto the best ELSS funds, you must know how we reached this list of high-performing funds. We have taken the top 5 funds as per ET Money rankings. Now, ET Money rankings are based on 2 crucial parameters: the consistency of returns and consistent protection from volatility. The purpose was to find out how consistently a fund has generated returns as well as ensured protection against market ups and downs. So a fund with the most consistent returns and protection from volatility got the top rank. Finally, let's reveal the fund names. We'll start from rank 5. So the 5th best ELSS fund is Mahindra Manulife ELSS fund. With a 4-star rating both for consistency of returns and protection from volatility, Mahindra Manulife ELSS fund stood at ET Money rank 5. This scheme was launched in October 2016 and manages total assets worth 649 crores. Coming to the returns part. Now this fund has given CAGR returns of 14.07% since inception. Now what is CAGR return? I'm moving slightly off track, but it is important to understand this metric before moving further. So CAGR or compounded annual growth rate is a way to measure how an investment has grown over a specific period of time. It takes into account the effect of compounding, which means that the growth builds upon itself. Coming back to the performance of the Mahindra Manulife ELSS fund. So in the 5-year period, Mahindra Manulife ELSS fund has grown by 14.77% CAGR. This means if you had invested 1 lakh in a fund 5 years ago, your money would have doubled to 2.09 lakh today. And a 5-year SIP of 10,000 rupees would have become worth 9.85 lakh rupees. Next, we move on to the fund that holds the 4th rank, Kotak Tax Saver Fund. Kotak Tax Saver Fund was launched in 2005 and holds assets worth 4,051 crore rupees. It has got a 4-star rating both for consistency of returns and protection from volatility. The fund has given 15.77% return since its launch and its 5-year CAGR stood at 15.93%. So, if you had invested 1 lakh in this fund 5 years ago, your money would have more than doubled to 2.09 lakh today. And with an SIP of 10,000 rupees started 5 years ago, you would have made a corpus of 9.83 lakh at present. Next, we move to the 3rd best ELSS fund, Bank of India Tax Advantage Fund. With an amazing 4.5-star rating for consistency of returns and a 3-star rating for protection from volatility, the Bank of India Tax Advantage Fund holds the 3rd ET Money rank. This fund was launched in the year 2009 and manages assets worth 841 crores. This fund has grown by 17.48% CAGR since inception, and in the 5-year period it has given returns of 16.17%. So if you had invested 1 lakh in Bank of India Tax Advantage Fund 5 years ago, it would have become 2x at 2.12 lakh today. And a 10,000 SIP would have grown to 10.37 lakh. Coming to the tax saving fund at the 2nd position, Canara Robeco Equity Tax Saver Fund. Canara Robeco Equity Tax Saver Fund is one of the oldest in the category. It was launched in 1993. So with a consistency of returns rating of 4.5 stars and protection from volatility rating of 3.5 stars, it holds ET Money rank 2 in the ELSS space. The 9th largest fund in the category manages assets worth 5,979 crores. The fund has given 15.56% CAGR return since launch, and in the last 5 years, the fund has given a similar returns of 15.71%. So 1 lakh rupees invested in Canara Robeco Equity Tax Saver Fund 5 years ago would have become 2.07 lakh, and a 10,000 rupees SIP would have given you 9.62 lakh in 5 years. Next, moving to the top ELSS fund, that is PGIM India ELSS Tax Saver Fund. PGIM India ELSS Tax Saver Fund is the topper in the ELSS space with high 4.5 star ratings both for consistency of returns and protection from volatility. It was launched in December 2015 and manages assets worth 557 crore rupees. The scheme has grown by 15.49% CAGR since its inception, and in the 5-year period also it has given a similar CAGR return of 15.12%. So if you had invested 1 lakh rupees in this fund 5 years ago, it would have become 2.02 lakh today, and an SIP of 10,000 rupees started 5 years ago would have become 9.82 lakh. Now, before we wrap up this video, I want to remind you that ELSS funds are not only meant to help you save taxes. Consider these funds as investment vehicles which can help you amplify your wealth for long-term goals. So if you are looking at investing in one of these tax saving schemes or any other fund of your choice, you can do that seamlessly on the ET Money app without paying any commissions for absolutely free. Also, do not forget to like this video and subscribe to our channel. Also, we request you to share this video with your friends and colleagues